Can an algorithm validate a $1 million strategy? Let's take a look at the details. Ahoy there, trader. It's Phil Newton. I've been trading since the 90s and full-time since 2001. And in all that time, I've been using a variation of this strategy. The nuts and bolts of it is exceptionally simple. The first thing I'm going to do is follow the institutional money. And to do that, I'm going to place 3 lines on the chart. You've got 1, 2, 3, the 200, the 50 and the 20 period moving average. Now what I'm looking for, rather than just looking for the crossover, which is all the way over here on the left, I'm going to look for those times where price is above the 200, above the 50, above the 20. And when it does that, and I'm just marking them off now, when it does that, then it provides me with a trading opportunity. And all I'm doing is highlighting in the last 12 or so months all the times where those conditions have actually happened. And if I just re-highlight the ones that didn't quite work out from a monetary point of view, we can see that by comparison in the last 12 months, if we'd just gone long above the moving average combination and closed out when price went below the moving average combination, then we're going to be capturing the bulk of the trend at every opportunity. And obviously it doesn't work all the time. We can see that there are 1, 2, 3 occasions just in the last 12 months where that didn't work out. So let's take a look at it. It was only recently that I finally managed to get my rules coded up. And this is what I discovered. Because up to this point, I thought, maybe it was just me. Did I have a secret ingredient? Or is this trading thing potentially and completely rule-based? So I put those rules into an algorithm, which is just a fancy way of saying a list of rules of do's and don'ts. And this is what came out. Now, the first thing that I generally look at is the win rate. The win rate's not that important, despite what everyone says. All I'm looking for is that it's not a one extreme or the other. So we've got a nice positive percentage of trades profitable. The next thing I'm looking at is, does it actually make money? I like to see making money on both the long and the short side, so it works in both bullish and bearish market environments. I also like to look at the profit factor. And they're the 3 elements that I look for. Probably the most important one, and it's a little bit intangible, just because I'm not trying to quantify it. Visually, again, I just want to see, is there a steady equity curve? There's going to be peaks and troughs. Again, it's not zigzagging, like a dinosaur back, but it's going up nicely. And again, we can look back at the performance reports for over 20 years, again, since the mid to late 90s. So we can quite literally validate that simple rule sets over a multi-decade approach. All we're looking at is a very simple follow the institutional money, follow the money, follow the trend, buy the dips, sell the rallies. It's such a simple concept, and it just keeps you on the right side of all the major movements. And if you'd like to learn a little bit more about this trading method, I refer to it as production line trading, which is a rule-based trading system, which is time-tested and proven. Then click the link next to this video, and I will see you on the other side. Bye for now.